Hi, I'm Scott Starratt with Starratt Wealth Management, a part of Canaccord Genuity Wealth Management. So today I wanted to touch base on more of a theme that we've talked about here for the last few months, and that's interest rates. Inflation, of course, continues to be stable, maybe ticking up a bit in some reports, down a little bit in others. And the concern that a lot of the central banks, so central banks being Bank of Canada, Federal Reserve, European Central Bank, are all concerned about are, should we be decreasing interest rates right now, or should we be waiting until a little bit later? And the consensus up until this point has been, let's wait a little bit later. The concern that a lot of these bankers have is they don't want to decrease interest rates at a time when the economy still is reasonably strong and maybe can bounce higher if the interest rates stimulate the economy. That would mean potentially that we could have an increase in inflation, which would not be a good thing because it would mean that they would have to just turn around and increase interest rates again or deal with higher inflation, neither of which people would be very happy about. So for right now, we continue to watch the data, and a lot of the central banks where they may have all said that they want to increase it or decrease interest rates will not be decreasing until they see that they're comfortable with how the economy is looking. At the beginning of the year, if you recall, a lot of people stated, more optimistic people anyway, stated that there was going to be about 6 interest rate cuts this year. And the likelihood of that is decreasing. So now the most optimistic people are in the camp of 3 to 4 cuts this year. At the beginning of the year, a lot of people had said that March we're going to start cutting. And now that most likely is into June. So as you can see, there's a lot of concern about whether the interest rates, whether inflation is going to come down enough. Right now, it looks like it is trending down, but we have to wait, I think, another few months to see, and then the central banks will act. In the meantime, with client portfolios, I continue to say we have conservative portfolios, which we do. However, we do have the most market exposure that we've had in quite a number of years, primarily because we do see some optimism out there. We continue to see that there are a number of companies that are related to AI, artificial intelligence, that continue to do very strongly. The market leader in this space is a company called NVIDIA. So NVIDIA was worth about $250 billion prior to COVID, so in 2019. Today it's worth $2 trillion. So that's a pretty big increase in a very large company. And a lot of that increase is due to the fact that their chips, which are really high-end computer chips used in AI, are flying off the shelves, and they have significant back orders for these chips. So as long as NVIDIA can stay a market leader, their stock will continue to do well. And we do have exposure to companies like that in the portfolio, but we also are of the mindset that there will be volatility this year, and we do want to take advantage of that volatility. So we do have investments still in the defense bucket and in the cash in order to take advantage of opportunities if they do come out. So this time of year, we often talk about taxes. The end of February is one milestone where a lot of the T5 slips, as well as some other tax reporting, is out. This year, because of Easter, a lot of other companies don't have to release their tax slips until April 2nd instead of March 31st. And so we do expect by the middle of April, if not earlier, for everybody to have all their tax slips and be able to go to the accountants. We always say, as you know, remind you that go off your checklist that we put together. Rimshaw and Angela have worked really hard to make sure that we're accurate in all these checklists. So if you do have any questions once you get the checklist and are missing a form or two, let us know, because chances are we can get the form a lot faster to you via email than over the regular mail service. And as well, check with us prior to sending the information to your accountant or pressing send to your taxes to make sure that you have all the tax forms. We are the other thing we're doing a lot of this year is contributions, of course, to tax-free savings accounts, to first home savings accounts, to RESPs, etc. So if you do have any questions regarding that, we're pretty well done with most people as it comes to that. We try to get it done in January and February. But if you do have any questions, please reach out to Jim or myself to ask. And finally, as I always say in these videos, the one thing Jim said is he likes that I ask for referrals. The second thing he said is don't mention Trump. So I just said the T word, so I guess I went back on that that promise. But what I will say is that we are meeting with a lot of people that you've sent our way, and we really appreciate that. Some cases we have a nice chat with them and we make some suggestions, and they can execute or go through their suggestions elsewhere. In some cases, we're more than happy to help them with their financial planning or giving them really solid advice in investment management. So always, if you do have any clients, I guess, if you're an accountant or a lawyer, but colleagues, family members, friends, etc., that may be a little frustrated with the investment returns over the last couple of years, please reach out to us, and we're more than happy to sit down with them to explore what type of advice we can give them.